Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Okay, let's start by talking about the actual earnings report. It's really not a very important report though. It only mattered if you were trading, as the numbers were really arbitrary without too much meaning. However, we'll still see if we can interpret what any of it means for the company. I did say there may be some surprises this quarter. The biggest surprise was the lower margin on the vehicles. According to the call though, this was actually due to the lockdowns in China more so. The temporary decline in Shanghai production volume meaningfully impacted margin due to idle capacity and factory restart costs. When I was doing my Chinese estimate, I said it could be difficult to judge the margin, and I thought I had a relatively low margin there already, plus winding down for the US dollar, but it would seem those lockdowns did add a lot to cost. That was my only surprise. I did say we may see other surprises, like Tesla releasing some of their deferred revenue from FSD, or perhaps Tesla selling some Bitcoin. Some Bitcoin, not about 3/4 of it. Wow, that was a big sale, and is the sole reason why we broke $2 for EPS. Also, the ASPs, they were up higher than I expected too. They were up 4% from last quarter. They were even 1.2% higher than my estimate, possibly due to the fact they had been hedged by the dollar maybe. And perhaps the price rise effects are being felt more than we assumed. The volatile prices do make things quite difficult to estimate. We also got regulatory credits of $344 million. A lot of people thought that would be lower this quarter due to such a large one in the previous. I guessed about 300 there, so not too bad. But including regulatory credits, we had a margin of 27.9% compared to 32.9%. Ouch, that's quite a drop. Like I said, a lot of this was due to China, but it's also possible we may have underestimated some of the cost of the money furnaces too. Alright, so it was margins where we felt the pain. R&D was about where I had expected. Everyone else seemed to still have high R&D expenses, and I explained that this was due to the testing of the new production lines. Those costs are now in COGS instead of R&D. SG&A was about where I said too, slightly lower actually, which is a good sign. Then the restructuring was $140 million. I budgeted 100 there for the layoffs and headquarters moving to Texas, etc. And I had the tax payment exactly right. Everyone else I saw had higher tax rates in excess of 13%, but they're usually under 10% with depreciation and previous losses. So I was really close with all of that, but missed margins this quarter. All right, nothing much else to say about that Q2 report. It is what it is, and we can move on to Q3 and see some serious ramping to the extreme. All right, onto the call. I won't go through each bit. I'll only talk about anything new or exciting and try and see how that might affect the company. Elon says they happily achieved 1,000 units a week at Berlin and expect Texas to be 1,000 a week milestone, hopefully in the next few months. Okay, I think we need to stop there and talk about that. Okay, Giga Texas won't be at 1,000 units a week for a few more months. And this is with 2170. That doesn't sound like a very impressive ramp at all. And Elon saying this won't even be for a few more months. I.e. not until Q4 will Texas reach 1,000 units a week. Now that is obviously incredibly disappointing, but we can't give Tesla a hard time because they are working so hard and doing such amazing things. It just takes a bit longer for them to achieve it than they thought. But the thing is, they will achieve it. They will reach their goal, whereas I don't think anyone else can come close to this. For Tesla, it's a when. For all the competition, it's still an if, or more likely, an if not. What I'm saying is that whenever we see Tesla facing these hard times, it just means their barrier to entry is that more solid. Okay, well that's my positive spin on that disappointing run rate schedule, but it will get there, and eventually it'll print money faster than Jerome Powell. But it does sound like more patience is required. Elon does say, however, that they do have sufficient supply of 2170 cells to ramp up these factories for the remainder of the year. He has said this before, and last time he said the issues will be going into next year if the 4680 is still not ramped up. From what I infer, Tesla have a stockpile of 2170s, and as they've been cutting back slightly, using LFP in standard ranges and energy, saving more 2170 cells, but there is no way they're producing close to enough for Berlin and Texas to both go into volume production sustainably. Elon says that they now have their second generation of manufacturing equipment for the 4680 cells in Texas, so presumably the manufacturing is progressing there. Elon talks a lot about how Tesla really is in manufacturing and pro-manufacturing. You can say Tesla's a tech company as much as you feel you need to, but tech is fast, coding's fast. Alright, aside from FSD, which is the hardest thing in the world to code, but it will be ready long before Tesla hit their manufacturing targets. Manufacturing is slow. It is the bottleneck. Tesla are changing manufacturing and making it faster. I've talked about this so much at length, and the economies of scale and margins that improve the faster you can ramp up the production line. Tesla are doing everything they can think of to make those cars as fast as possible, and then at as low a cost as possible. And Tesla have made a lot of advancements in manufacturing processes. The largest castings have reduced body welding robot count by 70%. A body shop that is 3 times smaller and producing a lighter body that costs less to build and with superior noise vibration harshness. Now, Elon compares these statistics for the new factories to Fremont, but not to Shanghai. But I think this is still a massive jump from Shanghai, especially when we factor in the structural packs. This is outstanding, everyone. We have done the calculations as to how much this could improve margins, and we're looking at potentially in excess of 40% margins. But remember, none of this has kicked in yet. In fact, it's doing the opposite. It's hurting margins dramatically, as it is a difficult task. It's just taking a bit of extra time. But remember, it's coming. And not only that, it's also going to bring quicker production speeds too. Anyway, my favorite part was Elon saying, "This journey is not over. We will bring another level of simplicity and manufacturing improvements for Cybertruck and future products." Translation: we have learned so much about manufacturing that our next products are going to be able to be produced faster and even lower cost. In other words, higher margins, more demand. I also just wanted to quickly mention Tesla's new safety feature coming up. With so much vision in the vehicles, a Tesla is able to anticipate a crash before it senses anything, and thus prepare the car that much earlier for impact, pre-tense the seatbelt and deploying airbags. And of course, this will be for free with an over-the-air update for all Teslas with the right hardware. As if Teslas weren't already the safest car in the world. No other company can replicate this either. It is unique to Tesla. Anyway, I just thought that was cool. Cybertruck is still on target for mid-next year. Elon thinks it might be their best product ever, and I'm sure there are plenty of people out there who would agree. Now, I know a lot of you are happy about the Bitcoin sale, but this was not sold because they thought Bitcoin was some toxic asset. This was done to make sure there was sufficient cash in order to get through such tough times. Tesla will rebuy their Bitcoin holding by the sounds of it. Remember, Bitcoin is not being bought as an investment. It's being used to hedge potential inflation, as in case you couldn't tell, the entire global economic system that we know is in disarray. I'm very happy with Tesla purchasing Bitcoin. It's not an investment, it's an insurance policy. And then we're told to still expect to reach 50% growth this year. 50% equates to 840,000 deliveries for the second half of the year, or about 420,000 each quarter. Although, of course, it might be more like 380,000 for the third quarter and 460,000 for the fourth. I'm going to get into depth on forecasts for those later on. Elon was asked about pricing, and he explains again that Tesla are just trying to hedge for potential inflation down the road. We've discussed this at length before. Due to the long waiting lists for the vehicles being so far out, we don't know what has happened in the economy by that stage, or what inflation has done. So Tesla are making sure they cover any potential increase in costs. But Elon says if inflation is declining, then they will not need to increase the car prices, or may even slightly decrease them, but it's out of Tesla's control. Although Elon seems to think inflation is showing signs of declining, but these things are incredibly difficult to predict. However, lithium refining is creating bottlenecks, and the processed lithium is becoming expensive, and Elon encourages any entrepreneur to invest in lithium refining. Elon talks about Tesla's structural pack now being an A architecture. Now, because it's new, they will start off getting a C within an A architecture. Funnily enough, I had actually also previously described the new 4680 structure as an A architect with C2. Bottom line, there is a lot of improvement left in the battery, as we would hope, because they still need to power semi-trucks. But then Elon says the A architecture with C is already beating the non-structural battery packs, and over time, with further refinement, will be substantially superior. Alright, I can handle substantially superior. It sounds good. There's so much to digest on all this, I don't want to skip over it, so I'm going to have to finish it off in another video. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.